Futures trading involves substantial risk of loss and may not be suitable for all investors.
Good morning. It's Friday, August 15th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So I'll be on the Schwab Network at 2:40 p.m. Central Time. I'll be covering the metals, the energies, the dollar, interest rates, so be sure to check it out. I also give kind of a precursor of what we're looking at next week. And if you haven't done so, please be sure to like and subscribe to our channel. And for any farmers that are out there, we'll be giving crop tour updates across the Midwest all next week and uploading them to the channel. So the biggest takeaway from yesterday's PPI data was really the movement in the Fed interest rate cut expectations. If you go to that CME's Fed Watch tool, I'll cue it up here right now. You look at pre-PPI, and we talked about this on the channel, you had the first time I had seen in quite a while here, in well over a month, that you have an expectation for a 50 basis point interest rate cut. It was about a 6.2% chance, and you had a 93% chance of just a 25 basis point cut. Now you go post PPI, that's when the data came in a little bit hotter than expected. What we saw was a shift, and we shift while maintaining still that 25 basis point interest rate cut at 92%. You saw about a 7% chance that the Fed will actually leave rates unchanged. So that shift in that market reaction there, going from possibility of 50 and a wider cut on up to, hey, we might even leave rates unchanged. Well, your natural reaction is you see the dollar rise, you see yields go up, gold futures go down, the Russell 2000, anything that's interest rate sensitive really had come off on that. We saw Bitcoin negatively react as well. Treasury Secretary Bissett, he said that they are not going to go out and actively pursue and buy cryptocurrencies. They're actually looking at confiscating and seizing them from criminal activity. So that kind of took some of the momentum out of the market. Now, what you want to look at is when you see these corrections and when you get closer to the tops in a lot of markets here or near all-time highs and things like that, emotions are really triggered. You get a lot of FOMO, and you also get a lot of people that were a little bit late to the party here, and they're concerned that, hey, they're buying the top, so they exit that market. What naturally I'll do is I'll look at what is the reaction the next day, and is there a catalyst to continuously see downward pressure on any of these markets here? Is there a shift in the signal going from a bullish trend to a bearish trend? Yes, you had a volatility event yesterday, but was it just episodic and non-trending? And if you look at the cryptocurrencies, well, it appears so. We've got the dollar index here back down. We've got foreign currencies all pushing up. The gold market has more just been where it was in fantasy football, this was your star running back, and now he's gone back to the bench. He's not your one or two. He's more your bench guy who could show back up, and I'll get into the levels on that. And it's because of the fact that you do have so many other asset classes like the NASDAQ, like the Russell, like the cryptocurrencies, all pushing much higher. I believe that silver will begin to outperform all of these various metals here in the short run as we see the gold-silver ratio start to come off a bit. Now, if you look at some other things here, overnight, the markets fairly quiet, okay? And there was quite a bit of data that came out in the overnight, but we'll also have a slew of economic data coming out this morning, and we also have a meeting between President Trump and Putin in Alaska. So we are seeing some weakness in that metal sector here. And something to note is that the Chinese economy that slowed across the board in July with factory activity, investment, and also retail demand disappointing. So you look at production in Chinese factories and mines, they rose at the slowest rate since November and expanded worse than expected forecast of 5.7% last month from a year earlier. And this is data that was released by the National Bureau of Statistics on Friday compared to June 6.8% gain. So the downside, though, may be limited because of increasing speculation that China will adopt some further supportive measures. Now, a lot of times when their mining activity starts to slow down, it's because of the fact that they see demand slow down just a touch. The retail sales also slowed down as well. And remember, the shift that took place from out of the gold market and into the platinum market and a spillover into the silver market because of gold prices had gotten significantly higher. They were no longer buying gold jewelry. They adopted to have platinum jewelry and also silver jewelry. Now, if you look at the European and also Asian stock market. We saw European stocks, they rose for the fourth straight day here. Investors are looking towards that meeting between Trump and Russia, and also some economic data. And then the Asian equities, they were higher with Japanese stocks really gaining after showing stronger than expected macro growth. The MSCI, it poised for its second straight weekly gain. Now today in the US, we're going to have some Empire manufacturing data for August. We'll have retail sales. That's something, those are two points that we're going to really want to watch here because of the fact that the retail sales is really that gauge of the consumer. And then the manufacturing in August here, are things starting to pick up because manufacturing has that effect on copper, on silver, on oil, on many of these other commodities out there. And you'll have industrial production followed by University of Michigan sentiment. Now next week's big event is going to be that Jackson Hole Symposium where Jerome Powell may acknowledge that weaker employment data and could pull forward, and you'll see some fluctuations in those interest rate expectations coming in. So all your interest rate sensitive vehicles are going to be very volatile, like what we're continuing to see as of right now. Now look at them across multi-duration time frames. Your weakest markets out there still remain the natural gas market, the volatility index, and the corn market on the agricultural front. You get into the strongest markets out there, well, it's the NASDAQ, the S&P, and the Ether. You go to ETF flows, and this was an interesting note here, is that on gold, you're continuing to see some dip buyers emerge. They are cutting just a little bit on some of those rallies. They are adding some on the declines, and that's where we get that consolidation that's taking place in the gold market at the moment. Kind of some level of complacency on either side of 3,400 at the moment. Now, from me, from a tactical trader, 3,400 really leaves me in no man's land. You really want to see that market either come down to 3,325 longer term support, really kind of clean some of the froth out of there, and really put a little bit of panic in the market in order to go back on sale for long-term positioning, because we are in a stagflation slash reflationary type environment. Now a push and a breakout over 34.25 on fuel that they are going to cut aggressively again pushes that market back through 34.25. We run into 34.50 resistance, and then above that you can look at the downward sloping trend line that's outlined in the chart pack, where that's an area where if you were overweighted in the gold market, you would look to trim some of those positions off. Now on the silver market, silver, the ETF flows continue with 2.37 million troy ounces being added in the previous trading session, bringing this year's total purchases up to 76.8. So that's an 11% jump up there. In silver, really the support level just a touch lower from where we're at, 37.62 and 37.21. You get the chart pack, you can see there's an area, and it's more like pocket support between that 37.50 down to 37.20. What you really want to see as a silver bull is a push back up through 38.80, because that will get all the chatter. That'll get the Reddit, the small forums and things like that continuing to discuss $40 and what lies beyond the $40 range here. So you could see that we came up to $39.91. They did announce a framework for a European Union deal that was about 3 weeks ago, and that's where silver futures got their first rug pull. We came back up to $38.80 on widespread speculative buying in that market, and a disconnect from other things like the copper market, which has been quite muted recently. Had one push up here, several percent up here on a daily basis, and then really just kind of pumping the brakes here and coming back off, almost forming a bear flag type pattern on the charts here. So otherwise, some wide ranges in the soybean market here. Some of the soft markets that we talked about recently, like sugar, kind of pushing back up, attempting another breakout on a weaker Brazilian crop here and concerns about it, and then coming back down here. Had some speculators really coming into the cotton market, the cocoa market, things like that, some of these outside markets. But back on the oil front here, I still consider that OPEC looks to continue to produce. The U.S. is starting to produce as well. You've got this meeting between Trump and Putin, which could take off some of the geopolitical tensions on there, kind of pulling out some of that. That's also spilling over into the gold market just a bit. And then finally, you do have the administration really wanting to get inflation down, and you have Trump talking about mid-50s type of crude oil. So I'm not necessarily People have asked me if I've been a bull on the oil market here, and looking even from a technical standpoint, that market's been in a downward trend. So if you guys got any questions, shoot an email to info@bluelinefutures.com. And remember that futures and option trading, it does involve risk of loss, and it may not be suitable to all investors. Good luck and good trading.